Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Wednesday, January 16th, 2008. Well, today was Whipsaw Wednesday, and the Wednesday before options expiration is even more so whipsaw, and today lived up to the billing. It was absolutely insane, the moves, left and right, up and down, every which way. Ultimately, the NASDAQ and the markets ended lower. The Dow ended down 35, the NASDAQ down 23, and the S&P down 7.75. Alright, today was an interesting day, and we're going to get into the charts, and I'm going to go over a few things. And it was kind of a hinge day, and I'm going to explain what I mean by that here. And ultimately, what we saw a gap down this morning, a rally. Alright, we hung around a breakout line until mid-afternoon, at which point we broke out to the upside, and it was a powerful breakout. The future spiked from, being down about 6 to 8 points, maybe even 10 points, all the way to plus 8 points. So it was a big reversal, big move up, and I'll show you that whole breakout situation on the intraday. Right now you're looking at the NASDAQ on the daily. But I also want to talk a little bit about the reversal at the end of the day and how that's not exactly the right move, but could it be looked at as a contrarian indicator today? Could that be somewhat of a flush out? And we're going to find out, obviously, as we move into analyzing this market. So let's get right to it. Let's first touch on the intraday. And I want to show you this, folks. All right? Let's get that intraday up here. And this is basically how the market did today. Here's 8 o'clock in the morning. All right? You had that CPI data at 8:30 in the morning. You see this drop here, but then a rally. And this is where we first started that breakout line. All right? And if I could go back here, I could show you another point, but it just won't fit on the screen. So for now, you guys will have to kind of bear with me. But needless to say, it was coinciding with the 200 moving average, which is this green line. So not only did a point over here coincide up here, but if you draw a line perfectly, all right, let's see if we can do that. All right, approximately right here, this is the breakout line. And again, let me stress that if you draw this line over all the way out here to an earlier point from yesterday, it coincides with an angle from there too. So that's what I talk about when you see things just coinciding day after day, equaling points here and there. Alright? So an interesting facet there. But what I want to point out here, folks, is that you're going to see a hit here of that moving average early in the day, a pullback, and we made the lows. Now look at that nice little bottoming tail on the intraday. Then a move back up. We hit it again, pulled back, hit it again, couldn't break out, pulled all the way back to this 50 moving average here, at which point we moved up, and this time we blasted off. Alright, and notice how it's a breakout line there, and it's also coinciding with the 200 moving average. So it's a double kind of line. There's a lot of resistance at that point, but when you break through, look at the extension on that move. Now, the interesting thing here is, folks, is that it really did not fare well. You got a great move up, but by the end of the day, selling came in, and the market just sold right off. And I want to just draw this line in as well. All right, let's draw this right in here. And I'm going to show you here on this line. All right, so you can see how this line is in this market. And not only that, but if you had this in before, you noticed the triangle formation here, right? Triangle up here, up here. You had a little outlier over here. But for the most part, you were in this triangle, the breakout. But then once you moved here and closed below that 20 right here, moved below that 50, that's a bearish sign right there, and the markets did end up closing down on the ES futures. Not a pretty sell-off into the close, to be honest, guys. Now, let's look at a few things, because there's some interesting things coming to fruition here on the charts. Number one, CPI came in line today. All right, 8:30 a.m. We talked about this in videos. It basically came in line, 0.2 on the core, which was what was expected. Now, it's good and bad. If it was a little less, maybe 0.1, the Fed could have been even super more aggressive in cutting rates, and maybe the market would get excited about that. Now, if it was more like 0.3, 0.4, then the market would be scared inflation was way too high and the Fed couldn't cut. So coming in right on par here at 0.2 was kind of a mixed bag. It was neither good nor bad, but neither bad nor good, if you understand what I'm saying. So again, that's the angle there from the CPI. Now, JP Morgan had some decent earnings this morning. The market liked the fact that they basically threw it all out on the table and said, this is what's wrong with us. This is how much we got to write down. And this is as opposed to yesterday with Citigroup, where Citigroup took an $18 billion write-down, but they basically said, listen, we're going to have more. There's going to be more. They didn't tell the market how much more. And at this point in the game, the market wants everything on the table, so we know the worst-case scenario, and then we can find out how much we can value this various stocks at, the market at, and so forth. Okay? So that's number one. Number 2, guys, on the NASDAQ, and this is where we're going to get into some technical analysis stuff. There's some very interesting pattern formations that I do think that there might be a chance for a catalyst for a bounce here in the coming days. All right, needless to say, it wasn't a pretty sell-off today, guys, into the close. But I do want to show you a few things on this chart. Let's go to the daily first of all. Number 1, the daily chart, if you go back to August, and I'm going to quickly scan back here to August. All right, here's August. Here's the low in August, right? And the low here in August was about 23, and let's double check that number here, and we'll get an exact number for everyone. The low there was 23.86. Now, we took out that low to the downside, but one thing I found significant about today was we did not close below that low. Okay, so take that into account. Yes, we broke it, but as long as you don't close on the daily below that low, that technical August level still holds true until we close below. Now, we could close below tomorrow, I don't know. But in the near term, you have to say, okay, that's a positive. Let's find the positives in this market. Number 1, we didn't close below August's low. All right, in fact, we closed at 23.94, well above the 23.86 level there. In addition, all right, we have the Fed looming, and I am more certain than ever, and I do expect more than ever, that at some point before the 30th of the meeting in late January here, on the 30th, 31st, whatever it is, there could be a cut. If it's going to happen, it's going to happen in the next couple days, I think, Thursday, Friday, or maybe next Tuesday. If the Fed, there's no really reason to wait anymore. Everyone knows the Fed's going to cut, so cutting a week or two early to help the markets out, to make the markets believe that the Fed is on your side, is probably the right move. I personally don't think cuts are necessarily the right thing. I think you got to let this market flush out. But granted, I'm mostly in cash. I'm not really getting hurt, you know. I'm sure I would have a different view if I was fully exposed. So I take that into account, and I appreciate that and understand the mentality there. Now, in addition, what I also want to point out, guys, is that Bernanke has been very honest with the markets, unlike Greenspan. Greenspan kept everything behind a veil. Now, the last Thursday, Bernanke came out and said, we're going to do whatever it takes to help this market. To me, that sounded like rate cuts were on the horizon. Every day now, the markets at some point expected a rate cut, whether it was 10 a.m., 9:30, 3 o'clock, and the market's getting disappointed day after day. The market does not like this. All right, this is not a good thing. All right, now let's get into some more technical analysis. Not only did we close above that 23.86 level, but I want to show you some trend lines here that are key to watch on the weekly. All right, number 1. Now let me get out my trend tool here so we can actually do some lines in this market. Okay, now number 1 here, I want to show this, and this is key to watch for the rest of the week. We have 2 more days in this week. Should we get a bounce and close above this line, you have to favor the upside near term. Look at this trend line. You have a hit here, and now we are below. Now, if we close below, that could be a breakdown in the weekly. But as of now, with 2 days left, let's see if we move back above. All right, a move back above would mean we'd have to get to about 24.40 or better on the NASDAQ. 24.40 or better. All right, so that's number 1. Let's follow that, because if we do get back above that, then it's only the 3rd hit of that line, and we'll see whether or not we bounce up before we come down. Ultimately, we're going lower, guys. I don't think that's a question in my mind, nor in anyone else's mind. It's just a matter of, do we have a bounce in the tank here? Is the Fed going to cut to catalyst that bounce? And so forth. Now, let's also take a look now, not only at the weekly, but I also want to take a look at the monthly. And I love these charts on Realtick because it's just phenomenal. Now, let's look right here. Let's draw from this point, and this is the other reason why I say we are possibly near a bounce area. And I could be totally wrong, so granted, I always say this, guys. Consult your financial advisor. I'm no genius here. I'm just looking at charts and, talking about what I see. Someone else could see something totally different, and I'm sure they do. Now, look at this. You have a hit right here, and this is going back to 2002, so we're really expanding the chart here to get a better view. All right? First, we're talking about this hit right here back in 2002. This was the bottom in 2002. Then we're talking about a test right here, and then look at that. We're testing that line again. Now, that's significant in my book, and that could say that we could be at a bounce area where we're hitting support in this market. Not only that, but you see the little tail that we made today, it actually touched this line. So I'm going to watch that as well, all right, unless we close on the monthly, and we'll have to follow. This is a monthly chart, so by the end of January, we'll get a better sense. If we close above that line on the monthly, maybe we're in for a small bounce, okay? So there are multiple things we got to follow here. And again, I love looking at larger time frames. You always get a better picture of things in larger time frames. Okay? So again, this is going back to the monthly. We looked at the weekly just a minute ago and saw that if we can bounce back up above 2440, maybe that weekly chart gets saved. All right? And again, notice how everything is coming to a point here all around the Fed. And what I hate to say here, guys, but it's true, and I'm flipping to the intraday chart here, is that at this point, the market's not trading the market anymore. We're not trading stocks anymore. We're not trading. What we're primarily trading is the Fed. All right, when the Fed cuts, that's when the rally will happen, blah, 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 and so forth. Maybe some good earnings will help too, like IBM the other day. Maybe that'll happen, but as of now, it's all hinging on the Fed, guys, and that's the way it's going to stay until we get this rate cut. And again, as I've always said, I'm not a huge fan of these rate cuts because ultimately it's going to be the downfall of this economy. All right, the 2002 rate cuts were bad. I mean, the 2000 with the internet bubble were bad. That's what caused the housing bust now, and it's going to happen again. But we got to have it happen now to save everything. Take care.